This video is brought to you by HalloCasa. Our tool transforms independent local real estate agents to global real estate agents. Create your own profile for free and get contacted by international investors. Sign up with the link in the description. Hello and welcome everyone to our 218th session of HalloCasa. My name is Mike and today I'm talking to Matthew Hughes, Managing Director of the CPA Group, which includes Capital Property Advisory, Capital Lending Advisory, and Matter Black Real Estate. Matthew bought his first property at just 19 years old, and since then he has built a career helping investors and home buyers across Australia, from Sydney and Melbourne to Brisbane and Perth, grow their portfolios and unlock new opportunities. He was even named National Property Strategist of the Year 2025. Matthew, thank you so much for your time. Thank you so much for being on the show. Why don't you introduce yourself to our audience?
Thanks for having me on, Michael. It's a pleasure to be here. Look, as you said, we operate within Australia, within the four major capital cities, so Sydney, Melbourne, Brisbane and Perth. And we are predominantly buyers agents and property investment advisors. So we provide independent fee-for-service advice for investors and home buyers and developers. And we also have a couple of sister companies within our group. As you mentioned, we've got the finance and mortgage broking arm, and we've got the property management arm as well. So we're able to provide a sort of a holistic solution for investors who are looking for everything from developing an initial strategy and a strategic plan that incorporates finance and tax advice as well, and then implementing and executing that plan through careful acquisitions in very specific locations, very, very thoughtful asset selection and suburb selection, and then we can help them with the lending to fund those acquisitions, and we can help with the asset management beyond that. So for investors, that's the solution. And then we also work with home buyers predominantly as well. Developers haven't been as active in the market over here of late, given the issues in the construction industry. So they've sort of fallen down in terms of the volume that we do in the development space. And myself as a developer, I'm getting out of that space as well, which we can talk about those issues and sort of share why I'm jumping out of that space. And we, as I said, we do quite a bit of work for owner-occupiers as well, more so at the luxury end across the various cities.
PIPA itself is a not-for-profit industry association. Give us an overview there. So you are acting as a body for property investors, helping them. How does it work?
Yeah, so it's a PIPA, or the Property Investment Professionals of Australia, is probably the peak body in our industry in the country, and I sit on the board as a director there. And we advocate for higher standards in our industry. So we're advocating for better legislation and regulation within our particular segment within real estate, being buyer's agency. And we also trying to raise the standard in terms of education for advisors and buyer's agents, and making sure that, and we also offer a couple of CPD qualified courses as well. So myself, I've been a qualified property investment advisor through PIPA for the last 10 years. And we're just working on releasing a new advanced model to go on as a sort of a version 2 of that for people who want to take their knowledge to the next step. So we're really and a body that is designed to support professionals within the industry rather than investors themselves. But the investors obviously benefit from that if we're raising the standard of advice out there.
Absolutely. What is in practice? How does it look like? Do you do trainings? Do you do you vet the people? Do they just have to pay a monthly fee? How does it work? And in order to understand that the label property advisor, is that a real estate agent, buyer agent, or is that a different profession?
There's a lot of buyers agents in the group, but there's other advisors as well. There's some finance brokers in the group and a few other sort of peripheral type services that also service this particular part of the industry. There is a vetting process for new members. So you do have to meet certain criteria to be admitted as a PIPA member. And then if you want to become a qualified property investment advisor, you have to do that diploma type course in order to get that qualification. And then you can advertise your business as a PIPA member and yourself as a QPIA. Which obviously brings with it a certain amount of credibility and is a bit of a stamp of approval for people who are looking for someone who is reputable and experienced and has the knowledge that they should be expecting from a fee-for-service advisor. There's also a requirement for ongoing compulsory development as well. So we have to get X amount of points per annum to make sure that we're keeping up to date with the latest legislation and changes in the market and so forth.
What's your market coverage? Let's assume I'm in Australia. I want to become a buyer's agent. I don't need basically to become affiliated with you, associated with you. I can just do it myself. Is that normally the underlying or the general approach by many property advisors? It's like, I'm just doing it myself. I built my own brand. I join a brokerage. They are my brand and they're the source of my credibility. Or is there increasing awareness of brokers and property advisors saying, no, I definitely also need this label?
Yeah, look, it's a combination of both. There's buyer's agency in Australia is still in its relative infancy. When I started in Perth originally, nearly 10 years ago, there was probably 4 buyer's agents in Western Australia. Now there's probably 100. So it's really exploded in terms of popularity, both in terms of people who want to do it for a living and clients who are requiring the service. I guess the market conditions here have really been conducive to people realizing they need help when they're purchasing. We've had a lot of capital cities go through some pretty explosive growth with low stock levels and very high demand. And through the frustration of missing out on multiple properties and not really understanding the negotiation and contract process, a lot of people have started turning to buyer's agents. But that's created its own problem in itself, where we've got a lot of new buyer's agents in the market, and a lot of them are not really all that experienced, and the barrier to entry is very low. There's not much that you need to do in order to become a real estate agent and then call yourself a buyer's agent. And in most states, there's not a lot of buyer's agent specific training within that real estate course. So you do have a lot of people who are running around calling themselves buyer's agents who perhaps don't have the experience and knowledge and credibility to actually execute the job properly. And so that's where clients who are looking for someone who has all of that, they're generally looking for that PIPA logo, or there's another organisation that I'm involved with called REBA, which is the Real Estate Buyers Agents Association of Australia. And that's another stamp of approval to look for as well. They have a pretty high barrier to entry as well.
You started buying your first property very early on. How did this happen? What was also maybe your passion there to say, okay, like this is definitely something I believe in. It's an asset class I'm aware of. And what was the situation back then?
Australians are property people. It's sort of ingrained in us. And everyone thinks they're a property expert in Australia, and it's often the topic of conversation at barbecues. I can't recall exactly. That was a long time ago. That's 28 years ago now. So I don't recall exactly what drove me to purchase that initial property. I may have gotten some advice from family or something like that, but my parents were not investors. I didn't get that sort of education from them within the household. I think I grew up in a relatively lower socioeconomic circumstance. Nothing too lower socioeconomic, but I knew that I wanted to. I had a bit of a drive inside of me. I played competitive sports as a kid, played basketball in America, and always had that sort of drive to succeed. And I guess that probably just transferred across from sports to then my professional life and investing and trying to create wealth. So that was probably the driver for me back then.
From that onwards, you really went into real estate. How has the market evolved from your point of view? Like what's from standards to also obviously the market itself? Give us an overview there.
Yeah, look, I didn't actually get into real estate as a profession until around 13, 14 years ago. So in terms of what it was like back then, my first house cost $95,000. And the mortgage, I think, was $700 a month. So obviously there's been a lot of growth since then in terms of asset values, and things are less affordable now than they used to be. And the market's changed a lot in that back then you could really buy anything and it would increase in value, and often at a pretty decent rate. I know that my place went up about 30% in the first year, albeit off that very low base. Whereas nowadays it's not quite like that. And that's where I think the interest in buyer's agency is coming from, is people are consumers are more educated. There's more information out there, and they're starting to realize what they don't know. And it's not as easy as it used to be, where it was a sort of a rising tide lifting all boats scenario. It's really quite nuanced and complex in terms of the outcomes that you can get if you select a good asset or a bad asset.
And now, what are tips you give normally first home buyers, people who want to invest and say, okay, this is definitely something you should look out for? What are general tips there?
Yeah, look, not a lot of general advice that we give. When we meet with new clients, it's all very customized. The process is all very bespoke. So a client, before they get to sit down with myself as the property strategist, will always fill out a pretty detailed fact find form so we can get a really good understanding of their current situation, an understanding of their risk profile, their cash flow profile, what are their future plans and goals? Are they planning on buying a new car, having children? All of these sorts of things are factored into the overarching strategy. And then once we've developed a strategy for them that includes not just trying to optimize financial outcomes, but also to mitigate risk as much as possible, then we work with them to actually execute it for them. Now, that's obviously if you're sitting down with and have chosen to work with a buyer's agent. A lot of people still do this on their own. The vast majority of people do. For people who are going it alone, I would recommend that they educate themselves, that they not rely on selling agents for advice because they appear very friendly, but they're working for the other team, and people tend to forget that when they get into a conversation with a very nice, smiley selling agent. And if you don't feel confident through that negotiation and due diligence process, then perhaps you do need to engage either a limited package with a buyer's agent where they can handle just that component of it for you for a lesser fee, or if you're knowledge poor, that probably suits you. Or if you're time poor and knowledge poor, then perhaps you should look at a buyer's agent for that full service where they can handle the research, the search process, accessing off-market opportunities that perhaps you wouldn't get to see. So it's different client by client. And there's some clients that we meet with where we talk them out of purchasing property, whether it's a home or an investment, because everyone's got aspirations and goals that they want to achieve. But some people can put themselves in a position where they're overstretching, and you never want to find yourself in a position where you're having to sell an asset at a time where you don't choose to. So that's part of the process we go through as well, is making sure that we're building in buffers and making sure that people are prepared for worst case scenarios, not just hoping for the best.
Recently, I talked to Ali Atta from the Negotiator platform, and he talked a lot about incentives of buyers agents. You just mentioned it. Sellers agents, they're differently incentivized. What's the incentive like? Also, the compensation look like actually for buyers agents? Is that just like a split? And then we talked about you just have to increase the price, the property price. The higher the property price, the better the split for both of them. How does that work in Australia? How is the compensation they're looking for?
Quite different to, I think that what you're referencing there is probably the US model, where there's X amount of commission and there's a buyer's agent and a selling agent on almost every transaction. In Australia, there's very typically a selling agent involved. Consumers are very comfortable with paying a selling agent roughly 2% of the purchase price to sell the property. And the percentage model works there because the higher the price they get, the more they get paid. So they're incentivized to get a better outcome for the client. It's different in buyer's agency, and it's the reason why we don't charge a percentage. So our fee is often loosely based on a percentage of the purchase price, based on the brief and budget that the client sets. But we always fix our fee, because if we charge a percentage, we're now getting paid more to spend more of your money. And so there are some buyer's agents that do that, and I don't think it's a good outcome for clients. So we always fix our fee for that reason. And fees they vary from a sort of a low-level buyer's agency. There's some that sort of inexperienced new people in the industry that'll be charging $10,000 or $12,000 per acquisition, right up to, I've seen some at sort of $20,000 to $25,000 for just an investor brief. We're somewhere in between there, so quite competitive, but certainly not the cheapest, but not the most expensive either. And I think it generally works out to be roughly around that 2%. And the way that I discuss that with clients is, look, if you, after hundreds of millions of dollars worth of transactions and negotiations and over a decade in the industry doing this every day, all day, if you don't think I'm 2% better than you at this, then don't engage, just go it alone. And some clients will, but most will realize that we're going to maximize the negotiation outcomes and probably pay for ourselves up front. But then if we're selecting a better asset for them that outperforms over the long term, which we've got a long track record of doing, then if it's growing at 6% instead of 4%, when you extrapolate that over a longer period, like a 10-year period, we're talking about hundreds of thousands of dollars of additional growth on a typical price property. So the value is certainly there if the clients see it. But you'll always have certain clients who don't see the value and think they can go it alone, and some of them are right, and unfortunately some of them are wrong and may learn the hard way.
CPA Group. Walk us through the group, and also you have capital property advisory, you have capital lending advisory, and also Matter Black real estate. How do these pieces fit together there?
Yeah, so Capital Property Advisory is the national buyers agency and independent advisory. And we do strategic planning under that banner, obviously property acquisitions. And then we're also engaging capital lending advisory in our finance team throughout that process, normally quite early in the process, whether we're developing a strategic plan or just the clients working with us to get a pre-approval for their purchase. So that's all done at the front end. And then we also offer strategic reviews as well. So whether it's just a finance review or a holistic review of their whole plan, we do that on an annual basis for clients, just to track how we're performing against set targets and metrics, and adjusting the plan based on changes in personal circumstances or changes in the market. And then Matt Black Real Estate is the property management arm. So we manage several hundred properties in WA. We've just launched in Victoria at the start of this year, now that we're buying quite actively over there. We haven't set that up in Queensland or Sydney yet because there's just not really the demand for it from our client base. Sydney's obviously a very expensive market and doesn't fit the profile in terms of budget for most investors, and the yields are quite soft based on those high prices. And Queensland, we don't have a ton of demand for at the moment because it's pretty comparable to Perth. But Perth's slightly more affordable and the yields are a little bit better, and it might be a little bit market cycle in my opinion. But they're so similar that we didn't see the need to sort of put resources on the ground in Brisbane yet. But I'd imagine we will at the right time, depending on market changes in the future.
And those data is also the base for you to decide to go a bit stronger on Victoria right now?
That's right. Yeah, we started researching. We had plans to expand nationally about 3 years ago, but then with the Perth market exploding, everyone was buying in Perth. So it sort of delayed our plans because all the investor attention was in Perth, which gave us more time to plan. We spent that time analysing multiple markets. Victoria bubbled to the top in terms of our level of interest for various reasons. It's very undervalued and has performed at a much lower level compared to your Brisbane's, Adelaide's, Perth's that have had sort of roughly 80% growth post-COVID. I think at the time Melbourne had done about 8 or 10%. And it typically sits at number 2 in terms of values in the hierarchy in Australia behind Sydney. And I think it's languishing now down at about spot 5 or 6. So that was the initial thing that caught our attention. And then we looked at the reasons why the market was undervalued. And there was a lot of negative sentiment and a big exodus of people from the state into other states and other countries post-COVID because of the COVID policies and the world famous lockdowns that they imposed on people in Victoria. So that dampened demand for quite some time. And then the government there dug themselves a pretty big hole in terms of the state debt. And to pay that off, they've targeted landlords to pay it through additional taxes. There's about 10 different taxes that they've employed in Victoria, mostly targeted towards landlords and investors. So there's a number of negatives with investing in Victoria, but assessed holistically, when you can get past the negative sentiment and the headlines, it actually stacks up very well. I'm very bullish on Victoria in terms of its potential for short to medium term growth over and above most of the other capital cities.
And those are also the elements and the reasons why you're stepping away a little slowly from that side of the business of residential property development with Hunter Capital.
Yeah, so the development arm, Hunter Capital, look, I've done about, I think, 4 residential developments that we've completed sort of from around COVID through to about 6 months ago. I've got one site left in a very premium suburb that we've subdivided and we have a development approval for with a renowned architect, and it's a phenomenal product. But construction prices have escalated to the point where I think our original budget and our feasibility at the start was about 1.3 million, and now I think we'd be lucky to build it for 2 million per dwelling. So it's not a risk I'm prepared to take. Most feasibilities on most properties in WA, and I think WA has been worst hit, Western Australia, but I think that it's also an issue in a number of other states where construction pricing and timeframes have blown out so much that it's very difficult to make a feasibility study work and to derive the sort of profit that you would need in order to take on that level of risk and debt. So we've decided to sell those lots vacant with the designs and some home buyers will pick those up and build their beautiful home. Then they're less focused on profit and more focused on actually getting the right outcome for their home. So that will work for them. But I'm getting out of that space for now and for the foreseeable future. And most clients I speak to, I'm recommending the same thing. Major renovations, probably not something you want to be looking at the moment, just based on the availability of trades and the costs and the timeframes. And certainly with construction, new construction, it's something that I'd be avoiding at the moment.
Looking ahead, next 24 months, 5 years, you can choose. How do you see the market evolving? And maybe also, overall, location-wise, what do you see is trending?
Yeah, I'll do 24 months because I don't predict. I don't do the crystal ball that far in advance. And I think anyone that does is just making things up. You can predict reasonably well, barring any major global catastrophes, based on fundamentals of most capital cities or regional areas. Within sort of a year or two, I can and got a pretty good track record of predicting what's going to happen. If we start with Melbourne, for example, Melbourne's a market that has been in the doldrums for quite some time. Demand has really picked up since the start of the year, and it's probably going to pick up even more starting from next month. In almost a month to the day, the new first home buyers scheme is starting, and that's going to create a lot of new buyers from thin air. Buyers who previously couldn't purchase because they didn't have a big enough deposit now will be able to. And so there's going to be a big influx of new demand into all markets around Australia, not just Victoria. And markets like Perth on the other side of the country, which are already chronically undersupplied, you're going to see that stock level drop down even further, I think. So markets that are performing quite well at the moment, like Brisbane and Perth and Adelaide, will continue to, and will probably run further than I anticipated in terms of the potential for further growth in this cycle. And then I think the Sydney market's kicked into gear very recently, and the on-the-ground reports are probably not showing the statistics just yet because there's always a lag on those. But the on-the-ground feedback that I'm getting from Sydney is that market's really heating up again as well. And we've been in Melbourne buying now for about almost a year. And from when we started, when it was pretty favourable for us as buyers agents, it's really flipped, and it's now very much a seller's market. Not across the board, not all suburbs, but certainly in the suburbs that we're targeting.
Matthew, I know your time is very limited, and I appreciate the conversation. You gave us a very nice overview, starting with PIPA, your dedication. I mean, you have bought real estate when you were 19 years young. It's crazy, your vast experience and your development and evolvement towards being an expert in the entire market right now, with the developments and also with all your ventures right now. What is something you would like to mention to the audience which we haven't touched upon today?
I would suggest probably a couple of things. If you are considering buying a property in Australia, I would treat it with some urgency. If you have the capacity and the ability to activate your search and buy now, I would, because I do see the new first home buyer scheme pouring fuel on the fire in a number of different markets. And if you couple that with another rate cut potentially later this year, you're going to see a lot of increased demand, and you're going to pay more for your property. So if you have the ability and you're thinking to purchase, upgrading your home, buying an investment, whatever it may be, I would jump into that as soon as it's practical. And then if you are looking to purchase in Australia and you're looking to engage a professional, make sure you do your due diligence, because there is a lot of buyers agents popping up around the country, and there's a few red flags you need to look out for. Obviously, experience and local knowledge. I would be avoiding borderless buyers agents. That's not what we do. We've got people on the ground who execute what we do with local expertise and tons of experience. We don't send property managers through properties to inspect them for us and do it remotely. So that's probably another thing to keep an eye out for when you're doing your DD on a buyer's agent. And also a new phenomenon, which is the larger buying groups, the big national companies who are buying large volume. The reference I always make is that, look, if we're buying 10 or 15 properties a month and they're buying 100, I can assure you the quality of our 10 or 15 is probably going to be higher. So there's a lot of good companies out there with great reputations. So I'm not sort of trying to be disparaging here, but I think that the more I see this happening, the more I hear from what's going on in the market and from selling agents, some of these big groups are really just trying to churn those clients through and get their volume numbers, because you have to if you're signing up 100 clients a month, and it does result in probably a lesser outcome for the buyer sometimes, or the investor. So that's probably something I'd encourage everyone to be aware of.
You just mentioned it, the process itself before wrapping up. How long does it normally take? Is it a couple of months? Are there many steps involved?
Yeah, look, our onboarding process is very process driven, and we use a lot of different. Our tech stack probably one of the best in the country. So a lot of it is automated, and we can move a client through the onboarding process quite quickly, without rushing it, of course. And then in terms of once you're active, finding a property and securing it and settling it, probably takes between 2 weeks and 3 months for the typical client. 3 months would be a bit unlucky if you've swung and missed multiple times, which we're happy to do because we're not going to overpay for a property. 2 weeks would be very lucky. So somewhere in that band, depending on where you're buying and what your brief is. If your brief is relatively narrow in scope and it's a bit of a unicorn brief and we've only got 1 or 2 suburbs to look at, then it may take longer. But for the typical investor, that's a good probably band to work with. But at the moment, we've just employed some new people. We're applying more resources to try and get our clients into the market as quickly as possible based on all those factors I mentioned earlier.
How can people reach out to you?
People can find us, you can Google Capital Property Advisory, and that will get you to our main website, or the address is cpadvisory.com.au, or you can look me up or look us up on Instagram and just search Capital Property Advisory again, and you can follow us on Instagram or Facebook.
Perfect. I'll put those into the show notes. Matthew, thank you so much for your time. I appreciate
Thank you, Michael.
all your insights, and talk soon.
Great to chat. Thanks, mate.
Bye-bye. This video is brought to you by HalloCasa. Our tool transforms independent local real estate agents to global real estate agents. Create your own profile for free and get contacted by international investors. Sign up with the link in the description.